KLA jumped 8.8%. Lab scores at 71 out of 100. Why? This rally tracks the critical transition to gate-all-around transistor architectures, where KLA's process control is non-negotiable for yields. Their dominance in high-bandwidth memory metrology provides a structural margin floor that generalist analysts are currently underpricing. We break down how this hardware moat turns sub-2 nanometer complexity into pure cash flow. KLAC surged 8.8% today. KLA's inspection tools are the physical gatekeepers for 2 nanometers process node yield, a critical bottleneck. While Wall Street focuses on equipment sales, the lab sees KLA as indispensable for advanced AI silicon. Their Voyager and Surfscan optical inspection platforms manage extreme defect densities, navigating gate-all-around, GAA, transistors, and backside power delivery. Without KLA's precision, profitable HBM4 production is physically impossible. This direct leverage over silicon physics is why KLAC commanded today's price action. Quarterly financials showing modest revenue momentum for KLA. By Q4 2026, renewed trade tariffs could compress KLA's service revenue margins in China by 200 basis points, despite a normalizing yield curve. While the Fed rate sits at 3.63% and the yield spread normalizes at plus 0.40%, suggesting a stable economic backdrop, the specter of Trump tariff uncertainty looms. This macro force creates friction against capital expenditure decisions for KLA's global customers. U.S. export controls already restrict shipments of KLA's Archer metrology systems and SpectraShape platforms to major Chinese fabs. This directly threatens KLA's high-margin service revenue in mainland China, a critical market. While the CHIPS Act boosts domestic fab build-outs, the geopolitical risk of retaliatory trade barriers remains a tangible headwind for KLA's global operations, impacting its beta of 1.50. KLA reported earnings per share of $9.40, beating the Wall Street estimate of $9.32 by 0.8%. A solid beat that signals strong execution. KLA is trending higher, currently at 2,322 points. KLA's management is selling a story of ecosystem harmony, collective industry investment, and marginal increases in 2026. That's PR code for, we're capped by fab capacity, not demand. They want you to feel secure in long-term growth. They don't want you to ask why insiders net sold 5,359 shares in 90 days. Here's the decode. EPS beat by 0.8%, a rounding error. R&D jumped 6.4% YOY, but as a percentage of revenue, it's flat. That's not conviction, that's treading water. And while they tout 62% gross margins, they buried a 100 basis point memory pricing headwind, worse than last quarter. The silicon reality? KLA's yield bottlenecks mean even if KLA ships more tools, TSMC can't absorb them. The momentum breakdown for KLA. RSI sits at 72, pointing to overbought territory, signaling caution on new entries. MACD is currently bullish, with the histogram crossing above zero. KLA's core strength is its indispensable role in advanced node manufacturing, particularly for gate-all-around transistors and high-bandwidth memory. Their Voyager and Surfscan platforms manage extreme defect densities at 2 nanometers processes, enabling viable yields for next-gen AI accelerators. The Kronos 11 product line is essential for HBM4 capacity build-outs, making KLA a non-negotiable AI infrastructure partner. But here's what breaks the bull thesis. U.S. export controls on sub-14 nm logic tools severely restrict KLA's access to critical Chinese markets for Archer metrology systems. A prolonged slump in mature node spending, especially in automotive, could offset advanced AI logic gains. An RSI of 72.4 also suggests KLAC is overbought, vulnerable to a pullback from its $2,322.77 resistance. The pro-level question for KLA is this: how quickly can KLA pivot its high-margin service revenue away from geopolitically sensitive regions like mainland China, given its installed base? The lab's answer: this pivot is slow, measured in years, not quarters. Service revenue is sticky, tied to equipment already in the field. While the CHIPS Act incentivizes domestic expansion, replacing Chinese service revenue with US/EU revenue will be a multi-year transition, impacting gross margins in the interim as new fabs ramp up. If aggressive HBM4 capacity buildouts from SK Hynix and Micron accelerate faster than expected, leveraging KLA's Kronos 11 product line, KLAC could retest $2,500 by Q1 2027. If the automotive and industrial mature node slump persists and Chinese export controls tighten further, KLAC could see support break down to $1,900. The lab's call, hold. The AI score of 71 out of 100 indicates strong conviction in KLA's long-term advanced node leverage, but near-term geopolitical and mature node headwinds warrant caution. Watch for HBM4 fab announcements. KLAC's 200mm wafer capacity crunch just lit the fuse on a 12-month cycle. Is the buy signal on KLAC a conviction move, or do you see a better entry ahead? Comment below. This isn't financial advice, just engineering-level analysis for education. Markets move fast. Past performance doesn't predict the future, and you should always run your own numbers before pulling the trigger. Subscribe so you don't miss Thursday's deep dive. We're tearing down ASML. The lab's verdict stands.